All right, we are live here at Real Fridays. We have Jeremy Potter driving through Pennsylvania, who may call in at some point. We have Dr. Rick, who is on a mysterious phone call and is going to be 5 minutes late. And in person here in Boston at their corporate headquarters / workspace.
That's right.
For Own Up, we have Will Donovan. What's up, Will?
Not too much. Happy Friday.
Yeah, thanks for coming back on the show. It's been probably early this year, maybe like 10 months ago or something we had you on last.
For sure.
Something like that.
Yeah.
How's
It's good to be back.
Yeah. So just to give everyone a quick refresher on Own Up real quick, but mostly want to ask you what you're hearing in all your like year-end conversations.
Yeah, a lot of hiring within the consumer direct world. We're coming off of like 5 months of really strong refi performance, which always puts a little extra money in the coffers to sort of fuel some of the growth. That's still expected to be purchase heavy, but refi sort of helps pay the bills, especially within the CD shops.
And so when you have these conversations with lenders, they're coming to you, and you're talking about blends of purchase and refi. You're talking like, what are the other like levers you talk about?
Yeah, I mean, I think a big part of like purchase is sort of getting more specialized within purchase. So instead of setting up like a single campaign with a lender that could capture people that are 12 months from purchasing, that are typically significantly cheaper and are probably best suited to get matched with like a new zip of sorts.
Thanks for the shout out.
Yeah, a little shout out. But so segmenting both the campaigns or their portfolio of leads that they're buying, but then also aligning that portfolio with specific teams and specific margin profiles. So like, we have like an accepted offer or a signed purchase agreement segment. Typically that runs through a lower margin group. Refi rate and term versus cash out typically is sort of bifurcated a little bit in a similar sense.
And does the lender, I guess, open their kimono on like their margin to you so you can have that conversation?
Yeah, people are pretty transparent and curious, about what others are doing. And I think the more that they share, the better that we can sort of fit them into the right spot, as opposed to always assuming that something bad is being done with that information.
Our number one request in our recent like either year-end or quarter-end meetings with our biggest lender partners for NewZip has been something that we never used to share, was how are we tracking on all these different KPIs versus everyone else?
Yeah.
And we're like, oh, we don't share that. And they're like, no. I don't care how we track compared to like this competitor. I care how just anonymize it and give out of your 35 lenders that you work with, are we first? Are we 10th? Are we 35th?
Yeah.
So we started doing that, and that's just, we kind of have a crumb of the information you have. So they must really value it with you guys.
There's a lot of like, we do like QBRs for lenders, so we sort of group them in similar lenders that are set up similarly, that their campaigns are a similar distribution of leads, different margin profiles, and then give them like, here's you against a peer group of 10 lenders, and here's where you sort of stack rank. And there's always like an area that jumps out, like contact, credit pull, pre-approval issuance, lock, fund, and there's pretty clear sort of like waterfall of performance, and there's always one sort of thing that jumps out. Either you're not getting a high enough on the phone, and then everything else, regardless of your pull through, is going to be bad. Yeah. Or maybe you get a lot of people to pre-qual, but your rates aren't competitive enough for that segment of consumers.
So then you can be diagnostic. You should buy later stage leads because you're having trouble contacting, and you should buy earlier stage leads because you're great at it or whatever. Interesting. And then how much of it's, so you have the point in the process / like cost, like where, how deep, how far down the waterfall is one lever, purchase versus refi is one lever. And then is there another lever of like specialty product, like veteran? because everyone's been talking a lot about veteran products lately.
Yeah.
And how that's been really one of the few groups that's really grown this year in purchase.
Yeah.
Or like FHA. I don't know if do you guys even specialize like USDA?
No, I mean within VA, like there's always a lot of demand for it because like the rate the rate spread or like the opportunity that like a higher margin lender's rates are still competitive against what some like sleazy lender is selling them is still better, like so your conversion is going to be better, and then obviously like the gain on sale is attractive on those. So there's always a lot of there. So we don't really focus on that mainly because it only accounts for like 4% of our traffic.
Cool.
But the FHA stuff, that we have a lot more of that type of traffic. And yeah, there's some sort of building out of that for sure.
Interesting.
And I think that the other thing that we've been looking at is like, the space is always looked at like cost per lock or cost per fund with no notion of like gain on sale or loan size. So you really want to look at like the cost per lock or cost per fund in basis points on the sort of like revenue that's originated or the loan size. And so helping lenders get sort of smarter about that type of analysis has been insightful.
So you're talking lead, then what's the next milestone when you have this conversation, Paul?
Yeah, credit. So contact, credit, pre-qual, lock, fund.
Yeah. And so then you give them a cost per each.
Yeah.
I don't know if everyone can see this. Yeah, sort of. I probably can't read my writing, but yeah, just showing the waterfall.
Yeah.
And so
because there's always a notion
you have products that you've already pre-contacted.
Yeah.
You guys have a product where you've done some kind of a soft pull already, right? Too?
Yeah. So we have a version of like we call it like a post-consult purchase lead that has already been contacted.
Yeah.
We've pulled credit. We've issued a pre-qual. Yeah. So then it's sort of like
sometimes forget that you guys can issue pre-quals.
It's a live, it should be like an AUS approved eligible purchase lead with high intent.
Yeah. And closer, and so you have all the cost per every metric, and then you can take them through the pre-contacted, the pre-credit pulled, the pre-qualled. You guys don't lock loans for.
We had a
people
like OwnUp 1.0 was like we were more or less like a broker, so we have very in-depth APIs into OB, Mortec, whatever the pricing engine a lender is using, and we had a product called Lock Request Leads where we were
ready to lock.
Yeah, we were giving them, we were nurturing them and then getting them to a point where they were looking to shop, and we would give them a guided rate table experience with. When we onboarded a lender, we'd get all of their itemized cost input, so we could give them like a loan estimate in like a more consumer friendly fashion, and then those leads would go from lead to fund at like 85%. So it really was like outsourcing consumer direct to us. And
you guys think about bringing that back ever?
Yeah, we've talked a lot about it, and there's certain partners that have
requests that are not that, but are versions of that. That are like, how much of this can you operationalize for me? If I'm like more of a retail lender.
And you can see that there's a lot of people will pay for certainty. So
our friend Michael Kelleher, also in the Boston area, represent is. Yeah, Mike, I'm hearing that a lot too. Thanks for sharing that. I'm not sure if everyone can see it. I think they can. But Mike said, exciting. I just spoke to a large bank in Texas, and CD is their big initiative in 26. And yeah, I mean, that's the world that Will and I both kind of live in. So I'm sure we have biased information of everyone we talk to is talking about growing CD. So I like hearing it from other people. Because I know, Mike, you work with all different types of lenders and all different types of regions and everything else. I have specifically seen, I'm curious if you have, Will, that more banks are talking about getting in CD, like Mike said.
Yeah.
You have more bank conversations than you did a year or two ago?
Yeah, it's a lot of like DBAs of banks, but like, they are obviously banks. But yeah, this week alone, there's been 3 sort of like net new that are getting into, have picked up like small CD groups that are building out now DBAs for that initiative.
Cool. Yeah, we've run into it honestly, I never expected to run into it when I started building these. I've started signing partners.
Yeah.
A few years ago, we pretty quickly grew in some credit union spaces where they were like just really focused on the like white glove concierge real estate process that blended with their mortgage process. But never really thought it would go to banks quite as much, but it really has started to, and we're pretty far along with launching some pretty large bank partnerships. Won't be by the end of this year. It takes time, obviously, but a little more red tape. But or even just like buying process.
Yeah.
But
those vendor processes.
The vendor processes are along with banks. But it's interesting to see the different types of lenders doing it. And we talk about this on the show all the time, but I don't know if we did with you last time. Like there's almost like, or joke about it with Rick, like, is there like almost like no such thing as just a retail lender anymore? It's like everyone's kind of a hybrid. Retail lenders are recruiting outside their core region. Retail lenders are generating leads outside their core region on social media or by buying. Or a familiar conversation for me is like a lender who's really strong in, I don't know, 3 states, and they want to launch the 4th state or the next 3 states or whatever in 2026. And how do we do that? And I tell them to talk to you about leads, or talk to some of your competitors about leads, or a lot of them buy like Zillow leads, which like we are pretty strongly against and use it because it doesn't perform very well or play very well with the ecosystem. But like you see people getting creative. When you see retail lenders in Michigan buying Zillow leads in Kansas, it's like probably means something.
I mean it's I totally agree with that. Obviously biased, but I mean it's hard to think of like new age young people. A lot of them are like at least partially remote, like getting into the mortgage business, becoming just 100% retail LO is like, that would be like not impossible, but like very challenging.
Maybe in like a luxury market where it's like you make really deep builder and real estate relationships, but for like your average LO, I think you got to think of it a little more like full stack. Generate some of your own leads.
And even if it's just a means to like a strong referral basis, and then you become like a true retail LO, like, and that's the business model you want to run. But it's hard to do that out of the gate. So I think that's what pushes the fact that like there are less and less like true, 100% retail LO.
The meme of like the really inexperienced person and the really experienced person doing the exact same thing, but or sometimes they do it based on IQ or whatever, and then the person in the middle doing something totally different. we see that at NewZip. We see like really new loan officers do really well and adopt really quickly, and we see really experienced loan officers do really well and adopt really quickly. And in the middle has always been kind of like strange for us, where like LOs are trying to do something. I don't want to say overcomplicate it. Some figure out a great process, obviously, but I think some of them are overcomplicating it. So I always like think of that because I'll have lenders ask me like, oh, who should we start with when we launch a NewZip partnership? Should we start with our top LOs, right? I'm like, yeah, sure. Or your new ones. But not the middle experienced ones.
It's like you either want a blank slate or like the true salespeople that can sell anything.
They're crushing all different geographies or whatever. So I always think that's funny and probably a little bit similar for you.
For sure.
What else are you seeing? Like, are people? How are purchase and refi like shares changing in lender? In terms of their. How does a lender talk about it? Their targets or their budgets?
I mean, it's sort of like deja vu this year with rates falling again in September. At the exact same time that they did the prior year. So we saw a little bit of like people moving budget from purchase to refi, but things have stabilized, and a lot of our like core network is purchase minded into 26 with the idea of having sort of more specialized purchase versus refi into the future, as opposed to I think within consumer direct, it's hard to have salespeople doing both well, because you can very easily, and rightfully so, get distracted by the sort of dopamine hits that are refi for people that have been struggling to make money for 2.5 years.
Yeah, you're speaking my language now. We just see incredible outperformance of purchase specialized groups versus blended groups. I understand the temptation to blend. You want to give all your loan officers access to everything, but anytime that anyone asks my 2 cents, I'm like, there's a reason. There's a reason people specialize.
Yeah.
You know? Like
it's hard to like.
It takes 6 months to build a purchase pipeline.
Yeah.
You know? Some people say a year to build a purchase pipeline. You know, it depends if you're buying the, 85% lock leads. Like, sure, that might take you 2 months to build a purchase pipeline. But if you're buying like vanilla early funnel purchase leads,
for sure.
For I don't know what your price is roughly for those, for whatever the $30, $60 leads, like that takes probably a year to have a good pipeline, 6 months to have any maturity in the pipeline.
Yeah.
And so it's like, there's going to be a refi boom at some point in the next 12 months, probably in any period, right? Like even if it's a mini boom for a week, like we saw twice this year, or I don't know, depending on how you count it, 3 or 4 times this year.
Yeah. And it's hard for lenders to build that out too, because then they have to, like, in order to convince LOs, especially top performing LOs, to sign up for that, they have to pay them materially more for purchase. And out of the gates, they're going to be sort of like, bleeding money.
Yeah, you have to give them like a draw or something.
You
have to come up with a different comp model.
You don't have your annuity on the LOs.
Now we're too small of a screen. Can't see us both. Can you stack us, Rick? There you go.
There we go. Sorry, guys.
Welcome to Real Fridays, Dr. Rick.
Yeah, I know.
Right here in beautiful downtown Boston, Massachusetts, at OnUp's headquarters.
I'm so sorry. I was on we're in the process of another acquisition at NFM, and of course the call was supposed to end at 12:30, but it just went over. So I apologize. No, I'm a huge fan of OnUp.
As long as you close it, then we'll forgive you. If you don't, we won't.
Oh, I know. Well, we'll know more.
Your audio cut, I think. Can't hear you.
He might have muted himself.
Can you not hear me?
No, I mean very. You're about 20 feet under the sea.
How about now? Is it any better?
5 feet under the sea. Okay, I think we got you now.
Okay, great. No, I said I've been a huge fan of OnUps, and I'm just curious. The consumer direct business has been such a pendulum swing, and it really seemed like consumer direct was really kind of dying on the vine a little bit. And now with AI, it seems like everything is moving. There's such a massive sort of momentum toward consumer direct. Are you feeling that sort of compelling draw for your business? And how is AI going to change? It seems like you guys put people in place where a lot of AI is going to replace. So I feel like systems wise, you guys are perfectly primed for outbound AI, document collection bots, working with the consumer, hand holding the consumer. I mean, you guys are architected to really fit that role, I think, really, really smoothly.
Yeah. I mean, we'll do this month, we'll do like 50,000 leads, but we have a variety of different offerings, like long form, fully digital experiences, rate tables, lender tables. We have the concierge that you're sort of referencing that dials on leads and is treated as like a internal
call center
of sorts. Yeah. But yeah, we have AI versions of our home advisor team already that have been running for close to 9 months now. And then on the lender end, there's been a lot of lenders that have been historically refi that have been coming to us looking for leads, and a lot of them are feeding them directly to AI agents first, and then transferring them into LOs or bankers.
And are they still staying close to 100% refi, or does that also open the door to have a purchase conversation when they're like expanding?
Yeah, no, that's opened the door quite a bit. And yeah, a lot of those like refi only have opened up into
that's what you're doing.
Hybrid.
Yeah, Rick, we were just before you joined, we were touching on like how even your classic retail LO or Mike Kelleher made a comment about how some classic banks are getting more into lead buying and consumer direct or planning to. I've been saying that for a while because I'm biased because that's who calls NewsZip, but it does seem like that trend's happening. Do you see that with your different lines in the water at NFM, either internally or as you think about acquiring, and like merging? Do you freeze? It's a lovely
we actually
image to freeze on.
We actually work with NFM's like consumer direct division. They're out of Texas.
Yeah, cool.
That's all refi though.
Yeah. I was gonna say, better not work with another agent network.
No.
Well, it looks like we lost Rick again. Potter likewise is presumably in a dead zone driving around because despite this podcast being the same time every day, we're all always on the road for it. So let's get back to it, Will, then. So what are we going into? Yeah, just kind of the banks, the hybrid models.
What do you?
So like the purchase versus refi share, I think is where we were.
Yeah. I mean, I think like right now is the perfect time to be buying the early stuff that works best for like, people that have partnerships like NewsZip. Like if you're, you can buy sort of like very end of the funnel, like people that are under contract, and that always works year round. But the best bang for your buck is likely that early funnel stuff that you can get
purchase.
You can get
near the top,
get cheaply, and get integrated with an agent, and then sort of build a Q1 pipeline.
And we've talked to you about this, but we haven't talked about it a ton on the podcast. NewsZip is now we've launched it. We've got a few clients using it. We're in the process of launching kind of a call center done for you for our real estate, for our lender partners. So it's actually going to technically be a separate company, but NewsZip's going to operationalize where if you need help with this early part, the contact, we're not going to play in the mortgage space at all, but we're going to call on behalf of XYZ lender as their real estate partner, and then or just on their behalf, just as a service provider in some cases. So we feel like that's really bullish. That was what we pitched at the Lending Tree Summit a few weeks ago, and we won that innovation challenge there. So seems like the consumer direct lenders,
it's definitely an appetite for it.
To be interested enough in that for us to win that challenge, teasing that new product and new service, feels like there must be some. Those are a lot of the same lenders you talk to.
For sure. Yeah, I was actually talking with one of your one of our mutual clients that you introed us to, and they were excited about that. So
yes, we have room for a couple more campaigns if you're listening. But yeah, we're starting with our current partners because it's easier for a million reasons, and a good testing ground before we roll it out as like a vanilla call center product, because we can do it way we for compliance reasons we charge market value, but we can give a lot of bells and whistles if you're also our real estate partner, bigger credits to the clients, whatever it is.
A lot of cool gamification of cost that you can do there.
Right, exactly. You back online, doctor? Good doctor?
Yeah, I mean, my Wi-Fi signal is really poor, so I apologize. And so I don't know if you can hear me now. Can you?
Yeah, we got you. We hear you well now. Probably the best we've heard you. So
above water.
Yeah, above water.
Yeah. What I was, my final comment really was, I do see. Are you guys there?
Yep, we got you.
You guys, okay. I do see the appetite toward consumer direct with outbound AI bots that are, autonomizing the sales follow through, which naturally, look, even NFM, like most companies are simply not equipped to be effective at outbound consumer direct sales. And obviously the outbound autonomizing of that function using AI ends up leveling the playing field between retail and consumer direct, where all of a sudden retail can be consumer direct,
Yeah.
So all of a sudden that skill set isn't quite as unique to consumer direct, but that technology isn't quite there yet. I suspect that it's going to be. I suspect it's going to be fairly soon. But
our take is, and I think Will's take's similar based on what you guys have done, but our take is that bits and pieces of it are there, but it's not all there, and that's why we think we're in a good place to deliver it, because we already have the concierge staffing, and we already have the real estate information, and the home search, and we have all these other things that are already there. But yeah, you should certainly use
and I think
adopt the new tech to make it faster.
I know with my consulting with Flair, I mean, they're doing 1.2 million to 1.5 million calls a month or so. So they're still in that curve. I think there's some other platforms I think that might be doing 1 million calls a week, but so Flair's doing about 1.5 million calls a month, and they the more they get introduced to these mortgage companies that are leveraging their solution, the more the scope of their usage becomes broader and broader, because then people start realizing, oh, this is, we brought you in to do a much smaller use case. And then they see it, and then they expand the use case really quickly over the course of 3 to 4 months, 5 months.
Yeah.
The other thing that's out there is there's more and more lenders are coming to us, buying leads, dialing on them internally, and then transferring them out to retail. APM is a good example of that. Like, they have AP Connect, they buy it at corporate and then dial on it and transfer it out. NAF has a similar setup. There's more and more of that is going to be more and more common, because purchase is always going to be like a strong, retail first segment, but more and more consumers will want to be, getting in touch with lenders via online. So there's going to have to a conjoining of.
Yeah, it's going to be a hybrid of the tech and the process, at least, even if it is the retail LO, quote unquote, right? I guess. Yeah, that's a good way to think about it. Yeah, a ton of my conversations lately have been what you would consider retail lenders, which I feel like we didn't even used to talk to them. We're like, this is a consumer direct problem, but it's the blending's crazy, and I do think it's because of tech largely.
Sure. No, I think that I will compliment you, Brock, because I was talking to an investment banker yesterday, and NewZip came up, and he had no knowledge of my relationship with you, no knowledge of my relationship with NewZip. I mean, I have no relationship other than just being a super fan. And so what you guys are doing is really catching the attention of a lot of people, especially as you guys continue to just expand greater value within sort of the overall communication chain in the value chain of mortgage. So cool. Keep up the good work. Yeah, no, it was surprising. I was like, I know a little bit about NewZip.
For the record, it's not exploring a sale, so we don't have a banker, but just good to have bankers aware of you. Yeah.
No, look, because everyone's always trying to look for deals, right? Everyone's trying to look for deals and ways to invest and poke it around and that sort of thing. You know what I mean?
Yeah. No. I don't want to overstate it, because I know we're gonna get crushed by Christmas in a moment, but we're doing this. We're on pace for a record month in December, which just seems insane. About NewZip's best month ever right now is this month right now. So it's been pretty shocking to see the Q4 growth. Even we're really excited about it. We've hired some awesome people this year, including the director of our call center team that I was just talking about, who's someone I worked with at Rocket I worked there for 7 years with him, and he was one of the top performers, leading a team very similar to our team over there. So my life's almost gotten easier as we've been able to hire people. It's
that's the beauty of a little scale.
Yeah. What's the scale of OwnUp like today? You're saying how many leads you guys churn through? How big is your team? I guess How many lenders you work with, or however you guys look at scale?
The lender network is somewhere around 75 lenders now. We look at like core network as like the top 20 make up the 85, 90% of the budget on any given month. But yeah, the company's,
that's a good place to be.
Company's lean, but we've been growing revenue or like lead sales month over month has been growing 10+% for the last 24 months.
Month over month. Wow. So
don't you see that
doubling?
Yeah,
that's crazy.
Don't you see, just because of the use of AI and the efficiency of consumer connection and then consumer transfer, won't that efficiency alone? I mean, it seems like that efficiency alone will really increase your revenue opportunity pretty substantially. No?
Yeah, I mean, I think the better that leads can convert, the more money that a lender makes, the more money that theoretically that we can make. Like we're only keeping lenders happy if they're making money on the lead mix. I think there's definitely some efficiency to be had there. I think the real opportunity,
if the process gets cheaper, you can charge more.
Yeah,
right?
I mean, you to pre-qual or to pre-approval, like
terrible writing.
Pretty much every lender within Consumer Direct will convert something like 20% of their pre-quals. So if you get a higher amount of contacts, you're going to get more credit pulls, and then your like starting point of like monetization opportunities at pre-qual is going to be greater. So then it should all funnel down. It's not like,
and what is for like just like vanilla purchase lead, what's a target cost that you hear lenders look at? Maybe just like across geography, just to give people a taste.
Yeah, I mean, pretty much every lender will be happy with like a pre-qual cost per pre-qual sub $650 roughly.
Mm-hmm. And so that's whether they're buying a $5 lead from Zillow or a $250 lead.
Yeah,
it's
I
like
mean,
they're targeting.
We have leads that we sell for $200, but they get pre-approved at like 40%. So
that gets you to right around there, if not better.
You're still
better.
It's still a big carrot, even though it's many multiples of the cost.
Yeah, cool. Well, I think you need to jump, don't you? Well, you gotta. We're holding you up from doing some business.
I'll see you guys soon. But thanks for having us on. And
yeah, Rick, give me a call about some of the stuff we were texting about. But otherwise, thanks for coming on. Well,
yeah.
I'll definitely give you a jingle, Brock, and we'll have to do, because next Friday is the 19th, so it's the Friday before Christmas.
Yeah, I suppose it is.
I think we're gonna have to do a Christmas edition on the 26th. I mean,
we have to Potter in some elf boots or something. Yeah, some Santa hats.
Exactly.
Cool.
No, I'm looking forward to it. Sorry for being a little bit late. And yeah, we got.
It's fun doing it in person. We should get you to come in here too, somewhere in Boston, since we got such a.
I love it.
Mass here.
I got to answer this. I'm going to answer this call next. I'll talk to you later.
Yeah. All right. Thanks.